Good evening, this is Duane Lowry for the DPP Grain Desk, bringing you a Sunday night video on Sunday, August 18th. It is currently 3:30 in the afternoon. For the lack of any clear direction, I suppose we should expect some sort of steady-ish values here tonight. Technical conditions still warn of an impending or notable liquidation phase. That hasn't changed for the last 2 or 3 weeks, maybe for the last closer to the last month. Short-term technical conditions are not conducive to building upon Friday's strength. There's very little for new fundamental news here. The weather isn't that important. It's not being reacted to on a day-to-day basis in terms of changes. Might be part of the talking point lineup, but I don't think it's really have any influence on price swings during the day. Price action during the past month has been sloppy and has created a very much a trading range, often underperforming expectations and completely unable to translate lower and lower production estimates into higher and higher prices. I want to give you a few factoids here that may surprise you or help you to put things into a more thoroughly evaluated perspective. Let's start with Dees corn. We first traded last week's prices in mid-July. Of the last 3 weeks worth of trade in Dees corn, 60% of the time the daily settlement price has been equal or below Friday's close. During this period, national production ideas only declined. They were fully embraced in a declining pattern. USDA, along with other private forecasters, offered the quote-unquote official confirmations of such expectations. And yet, with 60% of the time we're settling at or below Friday's levels, especially knowing Friday was on a 3-day recovery, that's a lot of longs above the market that have got to wonder why aren't prices trending higher. The sentiment is clearly universally bullish. The fundamental data is bullish. There is no willingness to trade from the short side. Shorts have all left these markets and unwilling to trade them from the short side for a few weeks. The users have done whatever they're going to do to try to get some sort of protection or coverage. So there's a lot of things that suggest we've already spent a lot of buying energy on this, and for the market to basically go sideways for 3 weeks, to be in a trading range, to be choppy, and then look at it from the standpoint that 60% of the time we're trading below Friday's levels. I don't think that's a good sign of market strength. If we look at September wheat futures, since July 15th, slightly more than a month ago, 75% of the daily settlement prices have been equal or below Friday's settlement price. Friday's settlement price is 72, nearly 75 cents off of the high of the season. If you look at November soybeans, current prices were first traded by, Friday's values were first traded a month ago today. Prices have experienced a very wide-ranging and choppy price pattern for the past month. We had a $1.85 to begin the period, $1.85 rally. We broke $1.55. We rallied $1.27. We broke $1.08. We rallied $1.13. We had an 80-cent decline, and currently we're on a 60-cent recovery. Those are significant price moves in a very narrow 1-month trading range, and the overall pattern has not been to go higher. It's stagnation, it's sideways, it's congestion, it's pausing it, if you want to label it that way, if you're bullish, whatever you want to say. We're not trending higher, we're just trading sideways in a very choppy pattern. The day-to-day price action during the past month has often been disconnected to daily weather forecast changes, and often has been disappointing to prevailing trader sentiment. Each time the market finds a way to work its way back and make everybody feel comfortable, I'm not sure how long that can continue. Despite all these little factoids, trader sentiment is certainly seen as nearly universally bullish, and traders have been and continue to remain, and probably will for the foreseeable future, completely unwilling to trade any of these markets from the short side. The market traders seem to be most bullish towards, or which they've primarily focused on when they've talked about weather, The need to ration supplies, etc., has certainly been corn. From that perspective, and the fact that production ideas have been steadily falling and even confirmed by USDA and private estimates, corn's price action is clearly underperforming these popular expectations during the last month. And with 60% of the daily settlement prices during the past 3 weeks equal or below today's or Friday's finish. What does it all mean? It means that longs may be confident, but they are not seeing prices trend higher. They are seeing prices stagnate. And that in and of itself doesn't guarantee a liquidation event is on the horizon, but it does warn that if prices roll over and begin to weaken towards or below last week's lows, these speculative traders could easily become very discouraged after experiencing a month of this activity. And I think the typical response here is they're forced into a strategy of trying to protect profits, and that usually tends to lead to a very notable liquidation period. Time will tell, but I think those warnings are still present. Pro Farmers Crop Tour is going to be watched closely this week, and basically traders, I think, have high hopes that it will be a catalyst to higher values. So I think it's important that as you look and evaluate this week's price action on each day's performance, it's that you be alert to any underperforming price action this week, and be respectful of the overall situation that creates an opportunity for liquidation selling to escalate if these daily price patterns begin to falter despite the bullish expectations. Overall price trending activity during the past month has certainly been stagnating in a trading range, and we've not been trading higher. And with everyone clearly bullish in the marketplace saturated with speculative link, I don't think this stagnation can last. Either something's got to come along to propel new buying energy to enter the marketplace, or else traders are going to get tired of the sideways volatility and they're going to try to protect equity. I believe we are already in this mindset. I think the traders are already beginning to move up sell stop ideas. They're already beginning to rationalize how they want to try to protect profits and don't want to go see the market give back too much from the gains of the last 3 days. So I think we're already starting that process. And what it means is that the traders are going to be very quick to protect the profits, and any price weakness threatens to create expanding selling energy. As for tonight, the trade is going to expect values to be well supported in anticipation of Pro Farmers Crop Tour, and the bulls' confidence after the recovery efforts of the past 3 sessions is certainly evident. Short-term technical conditions are not conducive to building upon this energy, and I wouldn't trust strength efforts above Friday's closes, but yet I wouldn't be surprised that's how the market wants to try to line up here to begin with. I still think the warnings of an impending liquidation period are just too great to ignore, despite the bullish fundamental foundations. I think that once we get a liquidation flush ahead of us completed, and probably this will happen before we get into the heart of harvest, then you will probably transition to a period where the cash markets begin to do the job of rationing supplies, and the strength is felt in the cash markets, and will respond to what the actual harvest yield results are and how that is expected to weigh on final yield ideas versus what we are currently expecting. But I think that in the meantime, the futures market remains very vulnerable to a liquidation phase. The cash markets can do the ration job from here forward, and even if we put in large breaks here, which I think are very possible, that's not to say that we won't recover back. We won't come back to these levels that we're at now, possibly even make a new high in some of these markets. But I think at the present time, the risk remains that we're going to have a notable liquidation flush, and despite all the bullish ideas and the continually ratcheting lower of production ideas during the last month, markets have not been trending higher. They are working sideways, and that is not a good environment when you've already got the spec community completely saturated with longs, and everybody's on the same side of the market in terms of how they approach the market and their bullish attitudes towards that market. That is not a good sign, and I think the warnings deserve respect. For the DPP Grain Desk, it's been Duane Lowry.